Happy Friday, everyone. Happy Friday, everyone. Rich Swerbinsky with TMC. Just started broadcasting live, seeing everybody rolling in. We'll give it a minute or so and go ahead and get started.
Rich, hopefully your travel back from the conference was uneventful.
Yeah, uneventful. I didn't realize that my flight went through Atlanta, but I had to stay on the plane to get back to Cleveland. I had a layover that in Vegas and I went to Atlanta. I never had one of those before where you have a layover and then you have a second flight, and then it just I had to wait like another 2 hours. So it essentially was like two layovers, like disguised as one. So it was a long day in airports and airplanes, but other than that, all good.
So were the airports packed?
Yeah, they were pretty packed. I mean, my flight out was not full, but flights back were. So, but it was, relatively uneventful. They no longer serve alcohol on planes, Southwest at least. So I guess the mask raging and alcohol maybe is not a good combo. So people that are, the people that get very upset about having to wear a mask. So I was on the plane, my last trip, not this one, with one of those where there was a huge incident. Somebody wouldn't put a mask on and like security had to come take the person off the plane. So, but
So Brad wrote in saying your shirt says, "Oh, interest only."
the old IO loan, right? Exactly. I know. That's funny because the IO loan is absolutely a legitimate product. It kind of got lumped in with, like all the shit that happened in 07 and 08. And it's never to be
Watch your language.
But the IO loan for somebody that, wants to, instead of paying principal, would rather invest that money, like my Reddit Wall Street bets clan, you can, instead of using that money to principal, invest it in meme stocks, get a much higher return, and then pay your house down quicker.
Yeah, I think I agree 100%. The interest only did not cause the financial crisis. But I think there were other things that did, but I'm sure we're not here to talk about the financial crisis, but rather talk about the TMC event of the year, event of the century.
Yeah, I'm excited to get into, highlights and recaps from the conference, which was awesome. But a couple things first. This, I think, is the first time you're ever in the same location you've been in before, because I noticed the dueling sperm sculpture you have there in the background.
So I knew you were going to go there, Rich. I knew you were going to go there. I don't even know what to say to that. It's a I thought about having a different backdrop, but then I thought it would give folks another chance to see really these are upside down. These are steel, iron, I should say, iron corkscrews that were screwed into the sod in places like Montana, Wyoming, the Dakotas, Minnesota, the prairie, for the cavalry to set up a corral for their horse, a portable corral. And they're upside down in this block. And I ran into them in Santa Fe, New Mexico. And somehow this artist had bought, hundreds of these things that were just rusting away in some army warehouse somewhere from cavalry days from the 1870s and 80s. So he's making art with them. I think it's definitely worth it's definitely an interesting conversation to have, but say what you will about them. But anyway, getting back to the conference.
One more thing before we get going. Your video and the joke today were especially funny in your newsletter. The video was hysterical. The reverse of the parents going back to work with the kids taking them. And then the joke at the end was one of the better ones I've seen in your newsletter, which is saying a lot.
Thank you very much. And actually many people wrote saying similar things, including somebody special that you may want to talk about, that you're probably going to talk about regarding your conference. Somebody, a leader at the FHFA wrote, may have said something about the content.
Really?
Yeah.
Sandra T, my girl?
I'm not going to say yes or no.
Where do you get all the jokes? I've never asked you this before.
The
I mean,
jokes come
because
from readers. The, the
100%.
jokes, the jokes come from, I use a handful year after year, like my Cinco de Mayo joke is a timeless classic.
Mhm.
And some of the ones I use around St. Patrick's Day or the holidays are ones that I reuse. But I'd say 90% of the jokes come from readers who send them in, and some of them I can print and some of them I can't.
My favorite is the April 1st newsletter. I won't spoil it for anybody that maybe is a new subscriber, but I digress. And let's get into real business. This is the rundown with Rob and Rich. I'm Rich Swerbinsky with the Mortgage Collaborative, joined as I am every Friday at 3 p.m. Eastern with Rob Krisman. And Rob, was great to see you this week. It was great to see people. I mean, the venue was obviously awesome, but it was just a really uplifting and great event this week. So it was good to see you.
I agree 100%. It's truly it reminds us all that this is a people business, and the two-dimensional Zoom calls are nice up to a point. They're two-dimensional, but there's nothing like passing somebody in the hallway and saying, hey, how you doing? And giving somebody, shaking their hand or giving somebody a hug, or just being able to interact with people in a setting like that is refreshing. So hats off to TMC and frankly some of the other state conferences that have been held, and the NBA, which will be held next month in San Diego, for putting those venues together, because it is important to see people, and it's nice to see people.
Yeah, it really is. And like, we do a lot of networking calls where, our collab labs or calls that are networking calls where, people log on to Zooms with the intention of, sharing information and networking. But you're right, the interaction and the discourse is just different in person. It's hard to explain. And so many great tidbits shared this week. It was great to, I'm biased, obviously, but I think at a TMC event, man, you really get plugged into the mind of the best leaders in the industry, really leave with the sense of what is top of mind for them and how they're looking at the business. We are kind of on the periphery of the business. We talk to and interact with a lot of people in the business, but at least for me, no substitute for, really having genuine discussions with those that are making decisions on a day-to-day basis. And it was a lot of that this week.
I agree.
So let's get into some of the highlights from this week, and would certainly, as always, encourage any comments, feedback, questions from anybody in the audience, either that was at TMC Terranea or was not. And I'll start though with our keynotes that we had. And Monday morning, Sandra Thompson, the, I guess, interim director still of FHFA. There's some little birdies that I've heard chirping that seem to indicate she could be named the permanent director, which maybe is contrary to some rumors we've seen out there. What I'll say is, after hearing her speak, I really want her to become the permanent director. She seemed very genuine, very knowledgeable, very plugged into what FHFA needs to do to achieve the objectives that they want to achieve, was plugged into what's important to the people that finance all this business. Heaven forbid somebody thinks about those people, the mortgage industry. And then, I was also impressed. She's been in FHFA for a long time. I mean, could you picture somebody like with her mindset and values and ideals and what she wants FHFA to be, that sucked it up and worked with the Calabria FHFA for the last 4 years? I mean, to me, that said even a lot more about her. And I was really impressed with her address of our members and the Q&A we did.
Yeah, I think it's important for people on the call and listeners to understand how the mindset has changed. And that was demonstrated during the Mortgage Collaborative event, to be able to bring her in video. And heck, maybe in March in Florida, she'll come down in person. But the mindset has shifted, and the move, all the talk of conservatorship has virtually vanished. And you got to give Mark Calabria credit, just like you have to give other people credit who firmly believe in what they believe in and have the ability to carry it out. And that may or may not agree with what other people believe and think, but he made his goals and objectives well known, and the industry to a great degree had to tag along. There were certainly a lot of complaints, and now that Mr. Calabria has gone and Sandra has stepped in, I don't know what quite to call her, Mrs. Thompson or Sandra Thompson has stepped in as the interim director. I know a week or two ago, Mike Calhoun was rumored to be kind of the actual nominee, and she was just a placeholder. I agree with you, Rich. I think that the industry would be better off if she were permanently installed in that position. I've emailed with her. She's seems very open to input. She seems very friendly to the industry. And the talk of conservatorship by the talk of leaving conservatorship by Fannie Mae and Freddie Mac has shifted to one of carrying out their mission, which is the Biden administration's mission, which is more towards first-time homebuyers, more toward underserved parts of our population, more toward affordable housing. And obviously a lot of that has hit the press, but it's one thing to say something like that. It's the other to actually implement some of the things in order to carry those things out. And she's already embarked down that path with regard to, the non-owner occupied caps and the second home caps and the adverse market fees and so forth and so on. Some of the things that FHFA has done is, either pause those things or retract those things. And I think that the industry has said, okay, this is really somebody who will listen to us. And because the industry to a great degree reflects what the borrowers are seeing and experiencing out there. So we act, whether it's the MBA or the Mortgage Collaborative and other groups, we act as a funnel for information from the millions of borrowers that we've helped and will continue to help. We act as a funnel for information to say, well, that's fine, but here's why, capping non-owner occupied product might have a negative impact on borrowers and the nation, because if the price goes up, then somebody might not want to buy that house and rent it out to a family who needs to rent while they're saving up money to buy, whatever it might be. So Sandra is much more, I think, tuned into hearing discussions like that. But you remember though, and I'm a Sandra fan, but remember that she has an administrative background. She doesn't necessarily have a lending background. And that administrative background to a great degree has to do with safety and soundness and some very prudent things that she's been involved in. And so it would be nice, I think the industry would welcome somebody who is certainly open to input from borrowers and from the industry, but with an eye on safety and soundness and prudent guidelines and so forth, and not just saying, opening the floodgates and saying, let's just let everybody in who may or may not deserve to own a home, but let's take a measured, careful look at the industry and let's figure out what's best for borrowers and what's best also for companies or institutions or whoever who invests in agency mortgage-backed securities. But because she is in charge of Fannie Mae and Freddie Mac, and she wants to make sure that there's a secondary market for agency mortgage-backed securities, and that we don't go down the path that we were in 2006, 2007, 2008, that Fannie Mae and Freddie Mac continue to produce or direct the production of valuable product that that investors like and that has sound backing. So that's a long-winded answer to what you brought up, but I think that she's in the right place at the right time, and if she stays, I think that would be a good thing for the industry.
Yeah, several great points. And, it's one thing to just, we're going to loosen the credit box and, expand home ownership. But, we both know what has happened in America every single time the home ownership rate has gotten above 71 or 72%. Chaos has followed. So it's a fine line to walk. For whatever it's worth, our CEO, Jim Park, has known Sandy T, that's what I'm going to call her, for a long time and has nothing but good things to say. But you're right. It is a balancing act. And then Tuesday morning we had, which I thought was great. We had some of them in person and then a couple others via Zoom. Some private equity guys that are focused on fintech. So fintech-based private equity firms that are, more in tune and have made a lot of plays and investments in the mortgage tech space, and a lot of good nuggets from that as well. A couple that really stuck with me. Our moderator, that runs our tech fund, Sandy Solomon, asked, what would you say now to the CEO of a mortgage company? And I forget which guy it was, but he said, I would think of yourself as like the CEO of Macy's in 2015. And I thought that was very poignant because who shops at Macy's anymore? Maybe you do, I don't know, but I thought it was very poignant. And he said, the big is not going to absorb the small, so as much as the fast is going to absorb the slow. And this was a multitude of different people that were saying this, that study our industry, but that aren't in it. And that, any lenders that don't really radically change their delivery model are going to be very hard pressed to compete in the future, just because tech has been delayed to the mortgage industry for a bunch of reasons. We know that. And then the last point I thought was really interesting was, again, trying to predict forward. He said that he viewed the mortgage industry going forward as almost all lenders would have kind of sticky add-on products. If it's homeowners insurance, title, it's one of the reasons that, some of these mortgage tech platforms like Blend and others are IPOing or exiting at such high multiples, is a lot of different ways to monetize the mortgage lending transaction. And, that they felt that was clearly the direction things were going, even for small lenders, that they felt like almost like what Rocket Mortgage is doing now, where they're into realty space and title and homeowners insurance, that like Rocket Mortgage in a box would be widely available to mortgage lenders in the not too distant future, even small ones. But I don't know what you thought about the PE guys. So
well, you summed it up very well. I think folks on the call, it's one thing to see things in writing, and it's another to hear them and experience them and deal with them verbally. And I think it's important to do both, to have them actually talk to us about their, what they're interested in. And one of my key takeaways was that there's a lot of things going on, but they make the point that the companies that they like are companies that have, I wouldn't call it extra, special sauce, but they are doing things that others might not be, or are doing, at a more measured pace or whatever it might be. The companies that have the best success in terms of attracting interest from, attracting big bucks like these guys are offering, or go public at some point, are companies that offer something that others in their class, maybe no one offers, or offers something special, some special twist. So during the Mortgage Collaborative event, I met several companies, and you start making lists and you exclude somebody, but I won't make lists. But you know, one that comes to mind, somebody who has sponsored the Rob and Rich show, I call it, by the way, the Rich and Rob show, is Active Comply, who is out there providing a service where they will monitor your loan officers, whether you have 5 loan officers or 500 or 5,000 loan officers. They will monitor their social media presence so that they're not out there saying best rates in the universe or making claims that they shouldn't make. And I think when you look at a company like that, or Maxwell or some of these others, Blend, they may have competitors, but they aren't quite doing the same things. And so when you have a company like that has an offering to the marketplace that others don't have, that's pretty neat. Like, gosh, why didn't we think of some way of measuring social media for loan officers? Because sometimes watching loan officers are like herding cats. You never know what they're saying, what they're doing, what they're posting, and so forth. And so to be able to outsource that to a company, I think is pretty neat. So the group that you had assembled to talk about some of the investments that they were making, I think they made that point that they look for companies that either offer something that nobody else does, or they offer it in a different way, or they're better at what they're offering. It's not yet another mortgage bank, or another whatever. It's something special. So I thought that was neat. And I think it was important for the audience to hear that.
Yeah, I thought it was good. And, kind of moving over to the mindset of the lender attendees and, what was on their mind and what they were talking about. I think, and there's some specific issues that I want to mention, but the general feeling I got was more so than any time, my 20 some years in the industry, I felt like leaders of lenders are at a crossroads right now. Everybody's made a lot of money the last 18 months. It's been very difficult, nearly impossible to implement new things, tech, platforms, systems, business lines, business channels these last 18 months because of the uncertainty and then just the amount of business. But right now, like, everybody is just examining every aspect of their company. It's still busy right now. 2021, it's looking like it's going to be the second biggest year in the history of mortgage lending behind last year. So you have that going on. And then you have mortgage lenders that are examining every aspect of their business, from their loan origination system to their key tech vendors and platforms, how they compensate people, their channel strategies, and are really kind of like calm before the next storm, because volume is going to drop off. The big guys keep getting bigger and scaling. A lot went public, and I heard a lot of tales about these big lenders making just silly, signing bonus offers for their top salespeople, and that being one of the themes I heard. But a real crossroads for mortgage lenders right now is they try to figure out the path forward, and I think they realize the risk of making the wrong bets and the wrong decisions. So it was very interesting to see that dynamic unfold. Did you see it the same way?
Yeah, yes and no. I'll be the naysayer to some extent. I would say that the successful lenders and vendors, to a great degree, successful lenders out there, senior management who are good at what they do and who hire staff who are good at what they do, have always, since for decades, since lenders have been in place, have always been good at taking a look at what they're doing, seeing what their competitors are doing, whether they're combative competitors or friendly competitors, but hearing what they're doing and either acting in a different way or reacting or leapfrogging over whatever they're doing. And so you have a situation, and I've used this example before, but remember at the Super Bowl, the Quicken Rocket ad where you had a push button get mortgage, whatever the saying was, push button get mortgage, and that stands out in people's mind. This morning I was actually out, as a quick aside, I was on a bike ride, and I tend to call people while I'm on my bike rides and chat with them. And sometimes you lose connection, and then you say, they come back on, you say, can you hear me now? Can you hear me now? I really, I really despise whatever mobile phone, whatever phone company was that had that, can you hear me now? That's saying, because it pops into my head. But I don't remember I think it was Verizon, or I don't know who it was, Samsung, or I don't know. But anyway, when you talk about push button, get mortgage, everyone was like, oh my gosh. Well, everybody in the industry knows that that's not the case. You don't push a button and get a mortgage. However, every loan officer out there who has had to deal with clients know that a certain big chunk of their clients come to them thinking push button, get mortgage. So, which isn't a good thing. It's unrealistic expectations. Bill wrote to say it's sprint. Thank you, Bill. So the thing is, though, that the push button, get mortgage pushed companies to do was up their game. You couldn't just sit on your hands and say, oh, push button, yeah, that's fine, but we're going to stick with our yellow pads and our potted palms in the corner and our steel case desks and do business that way. It forced companies to take yet again another look at their own technology to be able to compete with that, so their loan officers could go out and say, okay, to explain to their borrowers why push button, get mortgage isn't the case, and here's why, and here's what our company does, and it's better than what other companies can do, and here's why. So push button, get mortgage, yeah, loan officers have to deal with a public that has that in their head, but it has forced leaders of companies, to your point, to up their game and to see what else is out there and really take a look at the technology that's available. Maybe they use it, maybe they don't, but to know what's out there. And getting back to the conference in general and what that, during that presentation, I'll say, Rich, that I wasn't, not to blow any smoke here or anything, but I'll say that I wasn't disappointed with anything at all out of that conference. I didn't go to a single session where I came away saying, well, that was a waste of time. I thought the venue was great. I thought the people were in a great mood. I was not disappointed with anything. And I think most, if not all of the attendees share that viewpoint about not being disappointed with anything. But getting back to your question about the technology and about what lenders are thinking right now, yeah, they're going to continue to look at technology. We could have been having this conversation a year or two or three ago. We'll be having it a year or two or three from now, because technology will always be with us. It's just a matter of what is useful to your company and how it communicates, how it fits in with your other technology. Because I know that technology is kind of this catch-all phrase. And there are still people out there with flip phones or no cell phones at all, but it's just a matter of what you use and what's going to help your borrowers out there. And I think that's what lenders are focused on, is figuring out what technology and what offerings can best help my loan officers help their clients. And that's what's important.
This is The Rundown with Rob and Rich. I'm Rich Swerbinsky with the Mortgage Collaborative, joined as I am each Friday at 3 p.m. Eastern by Rob Krisman. And I think it was process change too. I heard a lot of lenders essentially say this, like, what I went through operationally in 20 and 21, I never want to go through again. This cycle of hiring and training and firing, and like, we weren't ready for it. Nobody really was, because all hell just broke loose last April. And people were forced to really not only react on the fly to add support and people, but everything went remote as well. You had to put that in place. So if it was, hiring developers to create bots to automate human tasks, or very thorough cross-training of their staff, so you can move processors to underwriters to closers to processors to post-closers, or other emerging tech solutions that can help lessen the human need when you have big, huge, the usual roller coaster of the mortgage industry. I heard a lot of that. E-close, I think there was a lot of like, how the hell do we not have e-close anymore? What I heard in the e-close session and other sessions was really like getting settlement agents and title companies to uniformly understand and adopt true e-closes has been a big roadblock, and that the hurdles to e-close being 100% implemented at this point is probably more human than it is legal. So your thoughts on process change stuff you heard or saw, or e-close, or anything they had there?
And I think we only have 60 seconds left. I think that it's been interesting to watch, and it'll continue to be interesting to watch, because when you talk about technology replacing people, nobody wants technology to replace people. Oh my gosh, nobody wants to be forced out of a job because of technology. But when you look at some of the issues that are facing lenders right now, huge problems in the appraisal industry, whether it's people, whether it's appraiser training, whether it's new people coming into the appraisal business, whether it's appraisers only being able to do 2 appraisals a day and having way too much demand, or whatever it is. And so when you see these advances in technology and drone technology or appraisal waivers, whatever it might be, to help that backlog, which basically eliminates some need for appraisers. Same with underwriters. Candor has an underwriting product that's out there, and underwriters are out there saying, well, you can't replace underwriters. And I will say, yeah, probably not. You need some human eyes on that, but there are certain technologies out there that help alleviate the underwriter backlog. So if you're an underwriter and you just got a pay raise to $125,000 a year, and you got a retention bonus of another 25 grand, and you're looking around saying, well, this is pretty cool. Well, to be blunt, that's the reason why companies are looking at technology, so they don't have to pay somebody a retention bonus, so they don't have to pay somebody $125,000 a year. So it's tending to backfire on some of these things that we've seen operationally happen in 2020, early 2021, especially on the ops side. These huge retention bonuses, couldn't get ops people fast enough. Now companies are right-sized. They are, much better off than they were in 2020, but, they are looking at 2020 saying, okay, what kind of systems can we change here? What kind of technology can we bring in so that we're not dealing with having to rush out and hire another, huge team of ops people? How can we alleviate some of that? So yeah, it's once again 2020, early 2021, fantastic margins, fantastic volumes, a great time to be in the industry. But I think companies are going to use that experience to learn and see what they can do in the future to try to not have some of the bad things happen again to them should we have to ramp up.
Yeah, no, I totally agree. And a few other issues I wanted to get to. I know we're running short on time. A couple offensive side of the ball, a couple defensive side of the ball. Offensive side of the ball, recruiting and retention has ramped up. That, because of just the size of LO's pipelines, was very difficult for people to leave and lenders to recruit. For the large part, this last year and a half, recruiting and retention is in full blow. I heard story after story about just ridiculous signing bonuses being offered to LO, the high producing LOs and their teams, and lenders just thinking aloud with one another on how they've handled that. And on the retention side, I think lenders very focused on retaining their best people, knowing that the climate now in mortgage lending, more national, work from home, you can go work anywhere. So very focused on recruiting and retention. Actionable data, a lot of companies out there doing some pretty cool things with data where you can drill into any county in America and see, these are the lenders, this is how many loans were done in that county, this is what lenders did it, this is what realtors referred them to them, and this is the mix of the demographics of that business. So leaders of mortgage companies and banks and credit unions are, as I would be if I was still in it, salivating over this data, taking a look at a very granular basis, the markets they're in, not where they want to go. And then on the defensive side of the ball, diversifying their customer base for all the reasons we know, fair lending and the initiatives that FHFA is going to be moving forward with through Fannie and Freddie. And then cybersecurity, a ton of talk about cybersecurity. We had some members there that were victims of phishing attacks that spoke about them very openly and candidly, some terrifying stories of ransoms and having to pay these big sums of money. So I know I threw a lot out there, but those to me were some issues that really stood out with me as well this week in Terranea.
Yeah, I mean, you've listed some of them. It was a great conference. I want a real quick. Not I don't want to switch gears entirely, but there have been some questions that have come in regarding, say, the NBA conference next month in San Diego. I think attendance registrations are already over 2,500 for that, and so that's solid. And the something else that came up, Rich, not having nothing to do with the conference, but the Loan Depot lawsuit this week, which has been interesting to get a lot of input on. So maybe we can talk about that next Friday. I think we'll have a sponsor for next Friday, but a lot of things going on, and the folks who wrote about that, I'll shoot you an email. But there's a lot going on, and I think that the sessions, I mean, you had dozens and dozens and dozens of sessions at the event, and I think you hit exactly the dozens and dozens of topics that the industry is dealing with right now. So like I said earlier, I wasn't disappointed with anything, and I think people had a great time, and it was very, very informative.
Yeah, if it was our lender discussion leaders or just lenders and vendors that were in attendance in the session, I think just everybody was, our organization is very interactive in general. I would argue by far the most in the mortgage industry, but still you have sessions where, because of the topic or other factors, you don't get a lot of dialogue. People were really getting under the hood with one another. And I just thought the discourse in general was top notch. And the viewer that asked the stock question, I'm asking if any mortgage stocks make sense right. Rocket Mortgage at $17 a share to me is a screaming deal. I think with all the stuff they got going on with realty and title and all the different channels they're in, that's about the only mortgage stock I like right now. The rest, man, it's not a good public business line, especially if you're, you got a 5'6" CEO that's crazy and they're only in wholesale.
Yikes. I don't even know where to go with that one.
One channel, lowest profit margin,
But I will say this about that.
And
those are some fiercely competitive leaders of some of those publicly held companies. And I wouldn't bet against them necessarily. But I would also caution the readers, listen to me. It's like I put out a commentary or something. I would caution listeners to diversify their investments always. It's really a tragedy when I travel around the nation, or I'm talking to people, especially older people who had put and I'll say something like, Frank, Ivan, why are you still working? Well, I had all my retirement money in WAMU, or I had all my retirement money in Countrywide, or I had it all in Nat City or PNC or whatever it is, and the stocks plummeted. So my advice isn't necessarily to not invest or short a particular stock, but it's to diversify. A lot of the people, my bet is everyone on this call is in the mortgage business. Well, maybe that's not a great place to put your money.
My direct advice is not to invest. Rocket, maybe Guild, the rest, you're better off. You're better off going to Vegas with it. So
I have all my money in water stock, because you know what? When push comes to shove, I don't need the latest iPhone, but I do need to drink clean water. So that's where my money is.
Yeah. I'm going to the Eric Church concert in Cleveland tonight. I got 13-year-olds coming over tomorrow for my girlfriend's son's birthday party. And then I got Browns Bears on Sunday. Top that weekend. What do you got going on this weekend?
Nothing. I'm playing a little tennis tomorrow morning and trying to get some exercise, and maybe I'll sleep in past 4 a.m. on Sunday. I don't know. Not much. Catch up weekend.
A lot healthier than my weekend. Yeah, I don't know how much exercise I'm gonna get this weekend.
Scott writes that I'm going to be shampooing Myrtle. So Scott, I don't want to end up in the urgent care, local urgent care if I try to shampoo Myrtle. So I'm gonna pass on that and let her figure out her own health, cleanliness guidelines.
Some nice comments in the chat about the TMC conference, best conference. It was a great conference. And it's, with the guys that founded this company, they wanted to do, like, for whatever reason, this industry has been so dog eat dog and secretive, at least in my experience. And, what we're trying to do is the exact opposite of that. And it is really cool and powerful to see lenders that are like, listen, sharing secrets with somebody that's a state over from me isn't going to take my business model down. We're all getting better, we're all getting stronger. There is no way to get better as a mortgage lender than by sitting in rooms with other highly intelligent people and talking about what works, what doesn't, and just experiences with third parties and everything. So I thought it was great.
I agree. First of all, Cindy, I am not going to personally
tongue bathe Myrtle.
No, I'm not going to use my tongue to bathe Myrtle the cat. But it reminds me, Rich, what you just said about sitting in a room with a lot of intelligent people and exchanging ideas. I immediately flash back to Animal House, where they're trying to figure out which fraternity to pledge, and they keep getting put in with the room with which is totally politically incorrect now. I guess I forget who it was, like the blind guy, or I don't know. Anyway, no, but the group was good, and I sat in on a session, for example, on best executions in the capital markets, secondary marketing, and just people exchanging tips about what they're doing and what jumbo buyers are doing, what and so forth. It's really neat to be in that kind of environment, that collaborative environment where people are helping each other rather than, there wasn't a lot, people weren't running around short sheeting each other's beds or tossing water balloons at one another or so forth. There was just a lot of cooperation, a lot of just people, celebrating seeing one another again.
Absolutely. So yeah, and it was great. Great to see you, and thanks again for your very active role in the event as always. And I got a little nauseating with especially some of these younger. Oh, can you introduce me to Rob Krisman? Like Don Corleone at these things. So, I former cap markets guy. Now people are like kissing the pinky ring, and
no, it was can you introduce me to the bearded lady? I've been seeing her at these circus events. Be more like that.
So too funny, but no, in all seriousness, people love seeing you there and do view you as I told you the story of the young tech guys that we invested in with the tech fund, that they said they learned the industry from reading your column. And then I shared with you at lunch the one day, it's part of the TMC actual onboarding process is to go back and read the last 30 days as one of the steps of your commentary on the website you posted to. So good stuff. And, people probably think you take the Learjet in and just come and speak and leave. You're sitting in sessions and at all the events and, interacting with people. And that's how you stay so dialed in to what's going on in the industry, despite your somewhat advanced age. So,
oh man, well, I don't even know why I'm laughing at that. All right, I think it's time to wrap this show.
That's our cue to wrap it up. And Eric Church tonight, Michael Keller. I'm fired up. This is the #1 concert I wanted to see for a long time, and I haven't. But this is the rundown with Rob and Rich. Really appreciate all of our attendees for taking some time out this afternoon. We're now weekly every Friday at 3 p.m. Eastern. I forget who our special guest is next week, or if we have one.
With special guests and sponsors on Fridays. So that's cool.
Yeah. So if anybody wants to be involved and get involved in the rundown, get a hold of me or Rob, and we can work that. We're lining people up for the fall. So, and join the insanity in the discussion. So, but Rob, good seeing you this week. Thank you to all our attendees once again, and have a great weekend. And we'll see everybody next Friday at 3 p.m. Eastern.
Great.
Take care. Bye, guys.